I'm here to introduce Matthew Weatherly-White, and he's doing something really interesting that I find really intriguing. In my heritage, I'm an investigative reporter, and I've had questions that you can't answer that caused one Mississippi sheriff to go to a Parchman prison for 53 counts of fraud. And Matthew has a question that nobody can answer, and it makes real sense, but nobody can answer it. And so Matthew has something that people, they just don't know what to do with it. So Matthew, if you'd come out and ask this question, and we'll talk about why this is true. Thank you.
Thanks, Kevin.
Yeah, thank you.
This is cool. When I was a kid, we couldn't wait to watch reruns of The Twilight Zone. And if anybody's seen that show, you kind of got to ask why, right? It's kind of a crappy little show. B-movie sets, plotting dialogue, transparent storylines. But I think why that show was so compelling was because it blurred the distinction between our known world and this alternate reality where everything was different, and yet everything felt strangely, eerily familiar. And at the end of each show, the audience was left with one question. What if? I'm going to hold that question for a moment because we're going to use it to thread the next 12 minutes as we explore and unpack and hopefully answer a question that has been plaguing me since I attended my first SRI in the Rockies conference 22 years ago. Namely, what if the institutions that hold the vast bulk of the world's invested assets were to gene splice environmental, social, and governance factors in what we know as ESG investing into every phase of their investment process, and not just from a product generation, market capture perspective, but from a systems thinking, change-based orientation? I think you're gonna like the answer. So buckle up, because we've got a lot of ground to cover. My name is Matthew Weatherly-White. I am a founding partner and managing director at the CAPROCK Group. We're a multifamily office. We serve about 120 families around the world. We advise about $3 billion of capital, roughly $1 billion of which has been deployed with a sustainable, responsible impact mandate. Some of you know me. I see some familiar faces in the room, which is great because I'm nervous as hell. Some of you may have heard of me. A few of you may have been unlucky enough to see me recently on Bloomberg or Yahoo Finance or Reuters, blah, blah, blah. I want to give you a little bit of background for where this story came from, where this idea surfaced. Last year, I was speaking at the Credit Suisse annual Conservation Finance Confab, and during one of the breakout sessions, this wickedly smart fixed income manager stands up and he starts talking about his firm's work to integrate those ESG factors into their investment methodology. And he specifically talked about their ESG-focused portfolio. And he mentioned, almost in passing, that this strategy outperformed their conventional strategy. Not by a lot, but consistently. And yet it only represented 10% of their roughly $20 billion in assets under management. Now, I don't know about you guys, but the asset managers that I know would sell their grandmothers for a few extra basis points of performance. So it made no sense to me that this strategy with demonstrated superior performance was not their default setting. So, put my hand up, I asked the obvious question, dude, what's up? And he looked at me like I was in kindergarten. And he says, well, that's because this is our ESG-focused portfolio. So I want you to kind of hold that perspective in mind. Because after the conference, I wrote a blog on the interaction. It was sort of a Jonathan Swift, tongue-in-cheek, modest proposal kind of a thing, and I called it ESG opt-out. And I was really just having fun with it. But it got a lot of traction. Like, it didn't break the internet or anything, but I figured I was sort of onto something. Now, I'm gonna have to trust you to do something with me because I'm about to take a giant narrative leap. We're gonna get back to the whole ESG integration thing in a second, but right now we're gonna spend a couple minutes talking about something completely different. Organ donation. Not even one chuckle, all right. It's too early in the morning. A couple facts. So, according to the American Transplant Foundation, 18 people die every day in the United States for want of a donated organ. And there's about 124,000 people right now on organ donation transplant wait lists. I get the scale, 18 people. It's not exactly headline grabbing, but it is a problem. And what's interesting about this healthcare problem is that it has a solution. And the solution is so elegant and so simple that it can feel almost magical. So here's some details. Most people are not in the position to determine the destiny of their organs when they no longer need them. And so governments, recognizing this, have embedded this choice into one of many ubiquitous documents, like a driver's license registration form. And this choice is always framed in one of two ways: opt-in or opt-out. So pay attention, this is important. Opt-in requires that people intentionally choose to donate their organs when they die. Opt-out asks people to intentionally not donate their organs when they die. Any guesses on the results? In opt-in countries, about 15% of people donate their organs. In opt-out countries, 90%. There is no way that the cultural underpinnings of these predominantly developed, predominantly educated, predominantly Judeo-Christian countries would naturally drive such divergent results. There's been a lot of research on this choice dynamic. We don't have time to explore it in our precious 12 minutes. So if you're curious, I encourage you to Google it. It's super, super interesting. But the point here is that the prevailing view in opt-in countries is that organ donation is an act of extraordinary altruism, sort of like leaving your entire estate to charity as opposed to your family. Whereas the prevailing view in opt-out countries is that it is extraordinary to not donate your organs, more like skipping your daughter's ballet recital as opposed to skipping your daughter's graduation. So this point is important enough to repeat. In opt-in countries, organ donation is seen as extraordinary altruism, whereas in opt-out countries, it is seen as nothing more than ordinary community behavior. So intrigued, the research decided to replicate this project in two countries that are nearly identical and yet which maintained opposing policies, Germany and Austria. So Germany, an opt-in country, organ donation is seen as an ethically meaningful and costly action. In Austria, it's seen as an ethically trivial action. In Germany, donation rates are at 14%. In Austria, donation rates are at 91%. That their attitude on this subject, despite sharing a cultural, geopolitical, linguistic, geographical heritage, is so different, tells me that something else is going on. And I propose that this something else is the inverse of what most people think. And that is that in some cases, what we do shapes what we believe, rather than our beliefs shaping what we do. Now, if this is true, there's plenty of research to indicate that it is. It leads us back to one really important question. If a single box on a simple form can inform the way that we think about something as fraught and as complicated as what happens to our body after we die, is it possible that the same dynamic can be used to address dysfunctions in the capital markets? I believe the answer is yes. And here's why. Remember that study targets people's perceptions of what is normal and customary behavior, the status quo. But what's really important to understand is that very first opt-in form was designed by a mid-level bureaucrat. There was no science behind it. There was no research. There was no decades of accumulated cultural perspective to form none of that. In fact, the idea of institutionalized organ harvesting was utterly impossible 35 years ago. And so the opt-in decision became the status quo rather than reflecting it. And it stuck. But what if that bureaucrat had chosen opt-out instead? Given what we saw in Germany and Austria, I think that would have transformed the way that we think about something as fundamental as the sanctity of the human body. Okay, we just asked a pretty basic question of a really complicated subject and derived a provocative conclusion. Let's do the same thing with the capital markets. What if investors were asked to intentionally choose to invest exclusively in companies that exploit workers, pollute the environment, and engage in aggressive, fraudulent accounting practices? What if the marginalization of ESG and impact investing is nothing more than a behavioral attachment to the status quo? What if we changed one question on a new account form from opt-in to opt-out, and it transformed the relationship that capital markets have with sustainable and responsible investing? Now, before you haul out your list of objections, I've heard them all. Actually, this room probably doesn't have any objections. This room's probably like, yeah! But before we share the list of objections that we all know, concentration risk, increased volatility, concessionary performance, fiduciary standards, let me run a couple of bullet points past you. The KLD social index has performed in line with the S&P 500 for more than 25 years. Generation Asset Management has outperformed their benchmark by 500 basis points compounded annually for over a decade. The IRS recently ruled that ESG factors can and likely should be incorporated into fiduciary standards. Organic farming can be more profitable than conventional farming. Green buildings outperform conventional buildings. Sustainable timber harvesting practices yield longer, more durable, more consistent returns to the asset owner. The Clean 200 has outperformed a carbon-intensive index by 3 times since 2004. The list goes on. So why aren't these what-if questions being raised? I suggest that these questions are not being raised because they tap into a fundamentally polarizing concept. And that concept is that capitalism has no intrinsic morality. It has no orientation towards good or evil, and this is polarizing because we want it to. We want to anthropomorphize the system. We want to make it feel more human. We want to blame it, or we want to celebrate it. And we are wrong. Capitalism is nothing more than the world's most powerful optimization mechanism. It is a system of organization reflecting our prevailing cultural mores. What if we stopped asking the question, is capitalism good or evil? And instead started asking the question, to what end do we seek to optimize the capital markets? And more importantly, what do we need to do to get there? I suggest that if we were to simply make ESG investing the opt-out setting, the system would change fundamentally and irrevocably. And yet we wait, hoping that the financial system and the people involved therein will do the right thing. The potential that we saw play out around organ donation holds true for the capital markets. So rather than ask people to fight their cognitive and behavioral biases by opting in, let's instead encourage the financial system to embrace presumed consent for socially and environmentally responsible investments and see where it takes us. We won't be eliminating choice. We'll be reframing the choice to more closely align the capital markets with what most people in the world believe. That capitalism should serve a higher end than simply the manufacture and concentration of money. I tweeted not long ago that pessimists believe the world should change, and optimists believe that it will. But when you think about it, what is more optimistic than making an investment? You are making a statement about what you imagine the future is going to be like, and those positive returns, be they financial or philanthropic, are an implicit statement of optimism. So why not make that implicit statement explicit? Perhaps we'll end up in an alternate reality where everything is different, but everything feels eerily, strangely familiar. It has been said that there is nothing more powerful than an idea whose time has come. So call your broker, call your advisor, email your mutual fund company, light up your social media platform. Because ESG opt-out is an idea whose time has come. Thank you.